I think being tied into the tens of trillions of dollars of managed assets is important. I mean, there's really tens of trillions of dollars managed by RIAs or kind of big bank like broker networks, and a lot of that capital literally couldn't get into Bitcoin. And so it's either stuck there because it's a retirement account or just because that's where the person wants it. And they might be open to putting 1 or 2 or 3% into Bitcoin. It just has not been an option because none of the vehicles have been kind of up to par for those types of environments. And so to the extent that they're available, that is important over a multi-year time frame. That can add billions of dollars of inflow, which has a multiplier effect, especially when Bitcoin is very tightly held as it is now. And so that is, it's not like it's a non-variable.
On January 7th, right when the entire cryptocurrency industry was buzzing with excitement about the U.S. Securities and Exchange Commission finally approving spot Bitcoin ETFs, one Bitcoin enthusiast was not as enthusiastic as expected. Renowned macro analyst Alden made a post that caught some flack from many other Bitcoin advocates who were feeling more enthusiastic about the SEC's approvals. The post reads, "To be honest, I think the Bitcoin ETF is the most boring thing about Bitcoin right now. Whenever I get asked about it, I'm like, meh. Yes, the ETF should be good for price and liquidity since it gives large pools of walled garden capital more access to Bitcoin exposure. But in my view, the most important thing about Bitcoin right now is all the little hubs popping up around the world, as well as wallets and other technologies that help them localize their custody of Bitcoin rather than keep it all stashed in the giant Binance honeypot or wherever, and any solutions that help link them all together for payments." When Alden made this post, Bitcoin was trading above $44,000, and almost all other analysts were predicting a move to $50,000 and above. In a recent interview with Blue Collar Blue, Alden clarifies the reasons for her less than enthusiastic reaction to thousands of institutional investors finally getting some much-anticipated exposure to Bitcoin. She explains that she hasn't been really surprised about the post-halving price movements, which could so far be described as somewhat choppy. Before the approval, analysts were particularly divided on how spot Bitcoin ETFs would impact the underlying asset's price. According to Alden, the optimistic predictions were overly optimistic, and those calling for huge price downsides were overly pessimistic. Alden chose to maintain the middle ground, not too excited about potential upside moves or too worried about risks of market manipulation and other issues that have been raised. That said, the macro analyst still considers this as a huge plus for Bitcoin, adding that it might not be one of the key variables for this cycle, but it is a variable among many, one that is more likely to have a stronger impact in the next bull market. We will now bring you clips from Alden's interview, as she gives her valued opinions on Bitcoin ETFs and the influx of institutional investors. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
The way I would probably put it is, and the way I put it in my research is that it doesn't really affect my view of the direction of the next 2 years, but it can add more magnitude to the upside than if these didn't exist. And so, for example, I'm doubtful that ETFs are going to drive the next bull market, but I think that as that bull market materializes, that's another ease of inflow that could make the bull market do better than it would if these ETFs did not exist. And so it's money tends to chase price, ironically. So it's like I think that the next bull market probably comes from the same types of directions that the prior bull markets came from, which is, we went through this bear market, a lot of the fast money's out of Bitcoin. It's kind of gravitated towards those strong hands, people that are dollar cost averaging in, people that just, they're like listen to podcasts like this and they don't really plan on selling for the foreseeable future. They're kind of locked in. And so eventually you kind of get that really tight supply situation. And then you get better liquidity conditions. So I've been kind of beating the drum for a while that Bitcoin is very correlated with global liquidity metrics, more so than any other asset I track. And it's also the inverse is true. So if I look at all the things that are correlated with Bitcoin, liquidity is arguably the highest. So when the liquidity goes up, that tends to be constructive for Bitcoin price. But then it's especially so when you've been in a bear market for a while and a lot of those loosely held coins have gravitated towards the stronger hands that are only going to come out with like a 5x increase pretty much.
Right.
And as like a starting, like basically once you breach all-time highs, when you start to get a little bit of distribution from those types of hands. And then also when you break all-time highs, that's when people in their RIAs are saying like, why aren't we in Bitcoin? The ETFs came out months ago. What are we doing? And
Yeah.
and
Yeah.
so then you can get some of the inflows, and that's where I think it could add to it. It's certainly a constructive, positive variable, but for me, it's not the key catalyst, most likely.
Do you think that the ETF holders are going to be more steady and thereby decrease volatility to some degree?
So I don't know if they specifically will, but I do think that on average, the more widely held something is, the less volatile it can be, and the more liquid it can be, right? So when Bitcoin's small enough that like FTX like rehypothecating, $1.5 billion worth of Bitcoin can really mess it up. That's that when that kind of thing can happen, it's going to move price more. Whereas if it's 5 times as widely held, if it's 10 times as widely held, um, then there's fewer entities that can play games and kind of really mess up the price. And it's more the assets more diffused in portfolios that are not like quote unquote crypto focused. That all get liquidated at once, basically. And so, to the extent that people have it as a slice in a portfolio and rebalance it from time to time, whether it's the ETF or other vehicles. I mean, the ETF's now the most convenient vehicle for that. But then, there's also other ways to do it. That should, in theory, have a dampening effect on volatility. It doesn't mean I don't think we're going to have a big bull run and then probably a pretty big drop. But I think it could start taking the edge off in either direction because if Bitcoin's way up and it's pretty widely held at that point, that can rebalance it back down to the downside a little bit. So if you look at some of the this past bull cycle was the first one that had like a rounded top. The other ones all had these like crazy illiquid spike
Right.
tops, and this was the first rounded top. And unfortunately, the bottom was not as benign. There still was like a big kind of collapse because partially because of the FTX thing. But I think I would assume that's the norm going forward. Of course, Bitcoin can always surprise, but I think
Yep.
that that those spikes are a sign of kind of a less mature asset, and then as it reaches bigger amounts and things like that, you should expect more of those kind of rounded type of price action unless something extreme happens to it, unless you have a sovereign debt crisis in a major country or war or things like that.
Bitcoin's volatility is a widely debated issue, and what many perceive will be a stumbling block to the asset's wider acceptance. However, the days of that massive volatility may be quickly coming to an end. According to popular Bitcoin advocates like Michael Saylor, a steady decrease in Bitcoin's volatility is to be expected over the next few years as more institutional investors come aboard. Though Bitcoin will probably always be more volatile compared to traditional assets like bonds and stocks, the days of 90% drawdowns may very well be behind us. In fact, Real Vision CEO Raoul Pal believes we have only 2 more cycles before Bitcoin's volatility sizzles down to almost nothing. Let's get back to Alden's interview.
I take the under on those risks. That's part of why I think it's boring. I take the under on the upside, especially immediately from the ETFs, and I also take the under on the risks from the ETF. And large part that's because there's already like 600,000 coins in GBTC.
Yeah.
And so we're seeing coins come out of that bucket, diffuse into some of these other buckets. They're all at most of them are at Coinbase anyway, except for the Fidelity one, and I think a couple others are at Gemini. And so you're seeing a diffusion of that. I think on average we'll see a net inflow, but as Bitcoin gets more expensive, the amount of coins that can be captured in ETF, even though the dollar amount might be higher, the number of coins is still pretty hard to get a lot of coins into ETFs at this point. Bitcoin already had 15 years of distribution. Ironically, if the ETF came out back when the Winklevi wanted it to come out, I mean, they had the foresight to want it. But if it came out then, maybe there would be more concerns about a very large percentage of it being kind of held in these giant honeypots. But now it's had 15 years to get out there. It's out in the wild, so it's hard to tame at this point. So I don't really have concerns around that. There's certainly concerns for people that are in those custodial environments, but I view it as less existential towards Bitcoin itself. And I'd further phrase it as it was inevitable. So if Bitcoin can't withstand an ETF, it never really mattered to begin with. And so I see a lot of, and to go after the Bitcoin critics here, some of them are kind of like, oh, Bitcoin had a mission and now that mission's lost because they used the ETF on it. It's like Bitcoin doesn't even know it has an ETF on it. Bitcoin is just Bitcoin. In this case, one country, their SEC and their court system allowed an ETF bunch of entities that are not affiliated with Bitcoin made ETF wrappers around it. It gives people one more buying access, one more kind of custody access, one more trading scaling scheme that's on top of it. But it's a global asset, and it's an open source network. And so I kind of view that as relatively irrelevant, other than the extent that obviously, if you do control a lot of coins, you have some power over how, like, say, hard forks turn out, for example.
Yep.
And so it's not that concentration doesn't matter at all. It's just that there's already some degree of concentration. Luckily, it's not that high, and I don't think the introduction of the ETFs really changed that. It just kind of shifts around where it is.
What are your thoughts on Alden's interview? Though she is not completely bullish on spot Bitcoin ETFs in the short term, she believes they will have a massive impact on Bitcoin's prices in the long term, especially during the next bull market. Alden, a macro analyst, is generally more bullish on Bitcoin in the midterm, anything from mid-2024 to late 2025. She believes global macro conditions will be much better during that period, positively impacting Bitcoin and other assets. Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.